Well, the bulls were back this week. The market gained for the third straight week with financials leading from the front. On this week's edition of the Editor's Roundtable, we take stock of the week gone by. FII buying momentum continued, key earnings upgrades and downgrades, and why PSU Banks underperformed. I'm Sonia, and it's a full house today after a long time. Prashant, Anuj, Nimesh, Nigel, all are here with me. So, folks, it was a good week, right? I mean, the bulls came back with a bang. Struggled a little bit towards the end of the week, but 18,300, which was like a crucial resistance zone, got taken out. So hope for the best that perhaps this momentum could continue.
Yeah, nervous 90s, Sonia, as they say it. One more push needed to score a century. I think the Bank Nifty perhaps can do it with some good support, global support. One gap up and Bank Nifty would hit all-time high. And the mid-cap index should hit all-time high, or 52-week high at least. I think the Nifty perhaps still has some issue. But that's Nifty, you know, it always is the one which has some nakhra towards the end before it hits all-time high, but practically we're there.
By the way, who's watching television tomorrow, Saturday, election results?
Not me, for sure.
Karnataka elections, Anuj, I think you and I may be, right?
No, I am actually, Prashant, this week I am on full babysitting duty, so my wife's not here, so I am actually doing babysitting, so absolutely no TV, nothing, because, you know, then
Only
the kids
Peppa Pig, perhaps.
No, kids are too old for Peppa Pig now.
Okay.
So that those we've gone past that time.
Babysitting sometimes means putting on a Disney movie and then scooting at it.
Yeah, that we can do. Exactly.
But it's going to be a good week actually in terms of sporting action, right? The IPL, the semi-finals will get locked in.
Yeah.
And the EPL, you know, you have Arsenal which got a game at 9 p.m. Hopefully they come out trumps out there. So
against Brighton, right?
No, I'm not too sure, but it's an easy game.
And
Brighton,
no.
yeah, Brighton. Yeah.
Brighton won't be that easy, but yeah, Brighton in current form won't be easy.
The way they played against Newcastle last week was good.
They got a bit lucky, I would say. I mean, I watched that
Too
game.
much football, guys. So
But you know what?
Nigel's sporting evening starts today, right?
Yeah,
Nigel?
I'm going for the IPL
evening.
game. I'm taking my son. The first time he's going to visit the stadium, so quite excited for that. We've got our jerseys printed and going to cheer for the Mumbai Indians.
Oh, absolutely. And I think the Mumbai Indians, Arsenal and the markets have got their momentum going, right?
Yeah.
So I think that was a big takeaway from this week. So just want
In
to put
what
everything
world have
on board.
Arsenal got their momentum going? So, they were 10 points clear of City. They are now 4 points behind City. They've bottled it up. I like your confidence.
Let's hope, Sonia, 2 weeks down the line, we'll have Anuj in the corner.
And perhaps we'll have the last laugh. You never know, right? Hope springs eternal, as they say. Well, you know, just a couple of things, right? I mean, the bulls definitely are back. So the Nifty conquered that 18,300 mark this week, and it's been 3 straight weeks of gains now for the market. If you look at it, FIIs have been buying quite a bit. So if you look at what happened in May so far, over 12,200 crores of buying is what FIIs have seen. Now, just for the week gone by, a couple of key takeaways. So one is, of course, the Nifty was up about 1.5%. 2 pockets, rate sensitives are back. So banks and autos, even real estate in pockets did well, but the Nifty Bank Index was up 2.5%. The Nifty Auto Index was up 4.5%. And stocks like IndusInd Bank, Tata Motors, Eicher Motors, M&M, all up anywhere between 5 to 12%. So perhaps the narrative is that, the rate tightening cycle might be ending, and hence, rate sensitives came back with a bang. So let's see, maybe that could be the cue to watch out for. There are Karnataka election results as well, so the market will keep that on their radar. But Anuj, FII buying is something that continued on the Wall Street. Talk us through which sectors saw the most amount of buying. I was just mentioning rate sensitives. Does that top the list as well?
You know, Sonia, we had done this analysis last month as well, that FIIs are back, but with a rider. But now it's broadening, and as is the market rally. So let me go to the wall and just explain through the numbers, because what was interesting was that this was the second consecutive fortnight of FII buying, and what that means is since November 2022, it's first instance of back-to-back buying by FIIs in 2 fortnights. Now the net buy number is slightly muted, and I'll come to that. It's 2,864 crores of buying. In the period that we're talking about is April 16 to 30. But keep in mind, that's impacted by 5,900 crores of selling in IT. And we all know that why that happened. Let's in fact go through the sector-wise numbers. And what I've done is I've taken both the fortnights. Now, look at financial services. The momentum is intact. 4,400 crores in first fortnight, 3,280 crores in second fortnight. But this is where it gets really interesting. Capital goods from 924 to 1,747. Autos, I think the most phenomenal sector in the market right now is autos. 1259 crores of buying in the first fortnight, 728 crores in second fortnight. FMCG, from 348 crores, gone up to 802 crores. Even oil and gas, where previous fortnight you had seen selling of 560 crores, it's actually gone up to a buy of 936 crores. But just look at that last spoiler. 1,002 crores of buying in the previous fortnight, 5,900 crores of selling in IT sector. And last time when we had done this analysis, we found that only two stocks, HDFC and HDFC Bank, had accounted for bulk of FI flows. No longer the case. Look at some of the stocks where we have seen some decent rally. Larsen & Toubro, for example. And again, I mean, this is fortnight 16 to 30. What happened over the last couple of days, we'll find out with the data later. But in that period, Larsen gained 7%. And it saw delivery volume of 1.35 crore shares, which translates into delivery buying of almost 3,000 crores. Roughly 1,000 crores would have been from the FIIs. But the stock that really stood out in that period was Kotak Mahindra Bank. And it's made a big comeback, 5% up in that period, and delivery buying of almost 4,000 crores in Kotak. Again, you can roughly arrive at 2,000 crores of buying or so in Kotak by FIIs. Reliance made a big comeback, though up only 3%, but 3% for Reliance means a lot of contribution to the Nifty. And delivery volumes in Reliance were huge, almost 6,000 crores. And lastly, of course, the culprit. And I tell you what, this is an eye-popping number. Infosys, which has the highest FII holding in IT stocks, was down 10% in this period. Of course, it came out with numbers in that period. It saw delivery volume of 27,800 crores. It tells you where that sell number from FIs came in. But X of that, the market has broadened and the FI buying has broadened as well. It's really getting into more and more stocks. And I tell you what, the data for this fortnight would actually be even more revealing, and it would tell you that the market rally has broadened and so has the FI buying.
Okay, the market rally has broadened and so has the FI buying. But Nimesh is going to tell us about, what the dealing rooms are saying. Nimesh, there's some momentum that's come back, right? So what are the dealing rooms talking about?
Clearly, momentum is back, Sonia. And just to sum up this week, it was a tale of two halves. The first half was quite strong, good momentum. A lot of mid-cap and small caps did really well. The FI buying was quite strong for the first couple of days. Slightly it fizzled out in the last 2 days of trading. So Thursday and Friday were quite muted. The feedback was not very strong. The FI participation was much lower as well. I guess the one point which Anuj pointed out, the FI buying, that's clearly visible in the numbers as well. But historically, Anuj, I've seen this, and that was the feedback as well, that whenever there is FI buying back, you see a lot of momentum in the broader markets. The sense I'm getting is that largely happens because the FI buying is compensated by mutual fund selling, and those mutual fund guys then shift from large caps to mid caps and small caps. So that is the reason why you see a broader markets outperforming when the FI money turns back. So, typically a fund manager will sell ICICI Bank and look at second rank and third rank stocks just to compensate and just to be in the weight within the financials. So that's the reason why you see broader markets tend to outperform when the FI turns net buyer. I guess the other big trigger is the earnings, and that too has been a big surprise on the positive side. Most of the earnings, even in this week, barring an L&T or one or two names, were on the positive side, and we've seen sharp reactions to the earnings as well. So the earnings is positive, the FI buying has turned positive, the momentum is back. So and technically also we've broken some important resistance on the upside. So net the setup looks good for a strong momentum. And as I said, the FI buying really helps the broader markets to outperform.
Okay, that's a very interesting point Nimesh made about when FIs turn big buyers, the mutual funds turn to the broader market, and that's interesting, very interesting point, and why perhaps the broader market has done so well.
And again, this is a feedback from large CIOs, from large fund managers who manage a lot of money, and that's the overall feedback. They're very happy to sell when there are large FIs buying the large cap names, and they move towards the lower end, smaller names and quality names. So you'll see the quality will outperform in the broader markets when the FI turns buyer.
Absolutely. Now let's talk about earnings, because Prashant has done some number crunching. Prashant, we are halfway through. And how's the scorecard?
So this is the first of the two pieces I'm going to put out on earnings, because only 50% is done. Yeah. Let me just go across to the wall, tell you how earnings are looking this time around. What we're going to do is what we did at the end of the third quarter as well. Third quarter was a disaster, and it was a disaster because we saw so many more downgrades to full year F524 estimates as compared to upgrades. So there was hope in the fourth quarter that because raw material prices have softened, numbers will look much better in the fourth quarter. Is it panning out to be? So I counted NSE 200. I mean, it covers large cap 50, Nifty 50 companies, and it covers the next 150 largest companies. So it's a pretty good representative set. And as of yesterday's business close, exactly 100 out of the 200 companies have reported numbers so far. So let's get to it. How many companies have seen, and I've kind of split this into two pieces. One is earnings, companies which have seen earnings downgrades of over 5%, and companies which have seen earnings downgrades of over 10% to full year estimates, FY24 estimates, based on what the fourth quarter, FY23, looked like. So 17 companies out of the ones which have reported have seen earnings downgrades of over 5%. You have 8 companies which have reported earnings downgrades of over 10%. So this is the downgrades picture. Similar exercise for upgrades as well. And, the numbers are on your screen. Companies with earnings upgrades of over 5%, 12. So upgrades are lower as compared to downgrades in the 5% category and also in the 10% category, although here the gap is smaller. 7 companies out of the ones which have reported, only 50% have reported, have seen downgrades of over 10%. Now let's come to stocks, right? That's the real meat of the earnings season. Which are the companies which have seen the largest earnings revisions downwards over the last 1 month? Remember, it's almost exactly 1 month since the earnings season started. So the logic is, since companies started reporting earnings over the last 4 weeks, 1 month, how have earnings expectations for the full year 24 really moved? And these are, what I've done is I've divided into sectors as much as I could. So this is pharma. And you can see Laurus has seen a 27% cut in earnings for full year. Piramal has seen a 20% drop. Gland Pharma has seen a 6% drop. UPL has seen about a 14% drop. The next one is sort of consumer durables, consumer staples, a little bit of, basically pricey stocks. So look at Adani Wilmar, 15% cut. ABFRL for the second straight quarter, very steep cuts in earnings estimates. UBL, of course, numbers disappointed, 12% cut, 13 nearly. Voltas has seen a 6% cut. Whirlpool, Dabur are some of the other names where we've seen earnings being brought lower. The next is financials, right? I mean, this is interesting. We had Pankaj Tibrewal in the morning telling us that, according to him, the momentum of earnings upgrades, even for financials, is stalling in the fourth quarter. I'm looking at outright cuts here. Bajaj Finserv, 11% cut. HDFC Life, Yes Bank, HDFC AMC are some of the names which have seen downgrades. Tech and New Tech Mahindra, Zomato are on your screen. And then I end with, a bunch of names here. Bharat Forge, Tata Communications, and NHPC. These are sort of some of the big downgrades that we've seen. Now we come to the upgrades, really. And again, I bunched stocks as much as I could together. Paytm, big upgrade. Numbers were good, and the market has been constantly revising expectations high because they're closer to profitability. Adani Green Energy is another one. Markets have sort of upgraded earnings, although coverage is low here, I must point out. You look at PNG Health, the other one. Tire companies, right? It started with MRF, 15% upgrade. Apollo Tyres, Balakrishna Industries. Financials, where we've seen upgrades. AU Small Finance Bank, 25% upgrade. Stock's done very well. Chola Finance is almost a 4-digit stock now. Poonawalla FinCorp. And then you come to a lot of Tata Group companies. Look at this. Tata Chemicals, Indian Hotels, and Trent. So different sectors, but from the same group, which have seen upgrades. IGL and ABB India are the other ones where we've seen upgrades coming through. As I said, this is the first of the two sort of pieces I will put out because we've only seen earnings from 100 out of the 200 companies. So there's going to be another one coming. But so far, I would say it's sobering. It's not exactly the kind of quarter many were hoping for with raw material prices dropping, etc. As they say, stocks are slaves to earnings, and the earnings right now are kind of mixed. They're not one-way clear out there.
I think, Prashant, the big taking point is that instead of a fear of, downgrades, that's not happening. So I think that's supporting the market as well. There are not big downgrades coming in as far as the quarter four earnings are concerned. I understand the last half will be a bit disastrous for many, but largely till now, it looks like there are more upgrades than downgrades, and hence that's also supporting the market.
Actually, if I count the number of downgrades, they're more than the upgrades. So you look at this. Number of earnings, companies where earnings have been downgraded by more than 5%, 17. Upgrades are in this 5% category are 12, 17 versus 12. And over 10% is 8 downgrades, and upgrades are 7. Okay. And this is the first half. This is the good half, right?
Yeah,
as they say, the second half, for whatever reason, numbers start to deteriorate. So we'll have to watch.
Okay, well, let's move on. PSU Banks is something that Nigel is tracking. They've underperformed this week. Is there any specific reason for that?
Well, it's part of earnings itself. So this week itself, everyone's talking about consolidation on the Nifty. The Nifty private sector banks did well, but the PSU banks came in for selling. And this was triggered by what happened with Canara Bank's numbers. First look at it, good set of numbers it was, whether you're looking at the loan growth, whether you're looking at the asset quality. They put out a very detailed presentation as well with a very good guidance. So the street was very, very okay about it. The problem is the way provisioning is being computed as of now is going to change. And this has been going on for the last few months. Now, on their con call, they said that close to around 4 to 5% of the current loan book will be required, will go towards this ECL. That's expected credit loss provisioning. And if you're looking at their book, it's around 9 lakh crore odd. If you take 4 to 5% odd, it's around 40,000 crores approximately. And that's a very, very large number, much larger than what the street was working with. The problem is the street is wondering why they talking about such a high provisioning number. Are they being very, very stringent with regard to some of those loans which are in the book, which are currently standard or maybe stage 2, that means loans are already restructured? Will they go bad? So that's what created a lot of fear. And that's what created a ripple effect on other PSU banking names as well. CLSA, well, they've divided into two. But before we go ahead, you need to track the RBI guidelines. As of now, it's still discussion paper, and the fixed rules are not yet come out. So we'll have to wait by for that. CLSA, they say for private banks, well, they have enough of contingencies, so they won't be impacted one bit. In fact, ICICI Bank, they have a contingency of nearly around 30,000 crores odd, so there won't be any impact for them. But on the PSU banking names, they are saying it could be roughly around 0.8 to around 1.5% of the current loan book. And SBI and Bank of Baroda, they have already indicated that, in fact, it will be around 1% of their loan book. Morgan Stanley, they have gone ahead and they have put out some estimates, and they are factoring in the impact, assuming that 1% of the book will be towards ECL provisions. What kind of an impact can it have on the book value? So they had put out some numbers. For Canara Bank itself, it's nearly around 8% approximately. But some part of the street believes that this is on the higher side, and some managements as well have been talking to sell-side analysts. They believe that this is on the higher side. Short point, from here on, we'll have to wait by for the final guidelines from the RBI. And next week, I think a crucial factor, not only for the PSU banking names, but for the markets on the whole, will be SBI's commentary. The results are on the 18th, which is on Thursday. So further clarity could emerge at that point of time. But for the time being, because of this commentary on the ECL provisions, you saw the entire PSU banking banks under pressure all through the week.
All right. Well, let's do one thing. Let us take a short commercial break on that note. But on the other side of the break, we will be talking a lot more about all the top headlines. And we have a special conversation coming up with Andrew Holland as well. Do stay with us.